if you try to use your P&L that's incomplete, you could make some bad decisions because your data isn't all there.
You would never forget an expense. Just say that.
I haven't recorded payroll. I'm making a fortune this
I'm
month.
doing so great.
So, yeah.
This is the PMP Industry Insider Podcast.
Hey everyone, welcome out to another episode of the PMP Industry Insider Podcast, where we take a look at what is changing in the pest and lawn industries, and we take you to the front lines of those that are driving those changes. I'm Donnie Shelton, owner of Triangle Pest Control, as well as Triangle Lawn Care. And with me is the ever-famous, shall I say, Mr. Dan Gordon. Dan, would you like to say good afternoon? We're recording this afternoon. Introduce yourself, our sponsors, of course, a plug for the peer groups, our topic, and our very, very special guest.
Okay. Dan Gordon, PCO bookkeepers and M&A specialists. We provide CFO services, bookkeeping services, and exit planning services for the pest and lawn industry. If you're interested in any of that, PCObookkeepers.com. Next, our sponsors. If you're interested in marketing for the pest or lawn business or industry, that would be coalmarch.com. Coalmarch offers marketing services specifically designed for pest and lawn care companies. And if you're looking for industry-specific insurance, that would be PestSure. And they understand the risks of the business and offer coverage that fit your needs. And that would be pestsure.com. And last but not least, Voice for Pest, which is a pest management industry leader in designing and implementing unparalleled voice solutions for PCOs and LCOs? Lawn care operators. Yes, LCOs of any size from coast to coast. Learn more at voiceforpest.com/podcast. And if you haven't checked out their AI application, it's pretty slick. Peer groups, we run several of them with David Billingsley as our facilitator. And if you're interested in one of the peer groups, it's pmpindustryinsider.com/peer groups, or go back to listen to episode 136 for more information.
Yep.
And then our very special guests are two of our faves, and that is Donnie.
I thought you were going to say two schmucks, but I will take faves.
That's two. Anyway,
yeah.
The topic for today is it's kind of interesting. So, we all look at dashboards and we look at our CRMs and we look at our P&L and we try to make sense of it all and then run our business from that. So if you are dependent upon these particular reports, right, to make decisions, you would want those reports to be accurate.
That makes sense.
Yeah,
that makes sense.
I think that's a smart thing, right?
Mm-hmm.
And if they're not accurate, you can make some bad decisions, right? Mm-hmm. And we'd also want them to be comparable, right? So you don't want to do them one way one month and another way another month, and so that you can set out some goals and then hopefully reach those goals, and that the game doesn't change on you, right?
Mm-hmm. Mm-hmm.
You ever have that happen?
I have. In fact, it's funny, as you were talking, I was thinking about, we have been through a whole, oh my gosh. Well, Dan, you know the journey we've been through here at Triangle. We completely redid all of our reporting over the last 2 years, and we now have a data warehouse, and the reason we did a data warehouse is because we wanted to aggregate a lot of different data sources and get better insight as to what's going on. And listen, I know this episode is about financials, and here, I will tell you, the way that I do it at Triangle is I do it in two phases, which is one of the things I realized I was personally doing was I was running the company by the financials, and you absolutely should do that. It's really important that you do that. However, it's like running a company out of the rearview mirror and not the windshield. And what I mean by that is I didn't have like real time financial information. When I say like real time, like I needed to
Yeah,
know
no,
like,
financials are your P&L and your balance sheet. That's
and
looking in the
everything.
rear view. The
Right.
budget is looking forward, right?
Correct.
So,
Exactly. And
mhm.
so it was just like this gap. And so now the way I run the business is that I have this company scoreboard, and it's broken into basically five categories. It's previous year, it's actual, it's the forecast, and then it's the target and then the variance between the two. And what I do is I have each manager update their own numbers. And listen, this forecast, I mean, I call it Notre Dame's, right? I mean, listen, the forecast is what they anticipate it being. And the reason I do it this way is because our forecast is us playing the game. It's like me being in the fourth quarter and be like, I need this, this, and this, and this for this to come in. And then the financials is like, that's the real score, right? After we're all done. And so I don't want to take us off talking about data
No,
and
no,
that.
it's good because you go to a normal, a more traditional accounting firm, and you get a P&L and L and a balance sheet.
Hmm.
Maybe it's compiled or reviewed and with footnotes that really are not appropriate, or it doesn't matter to you as the owner. It might matter to your banker or somebody who's looking at it who's unfamiliar with your business. But what's important to you, or should be important to you in your business, is a P&L and balance sheet and operating statements. And those
Correct.
operating statements, are sales and marketing. They're the operations. They're, you
Hmm.
know, what are you doing? All these things that are built into the P&L, but aren't necessarily an accounting function. And
And
so,
I was just going to add to that, so when I look at it this way, the thing I like is, like you said, the operating piece of it is I'm able to play the game this month and make adjustments this month. But I'm also able, like, once we're all done, I do a review, and I know clients, PCOs, or PCO bookkeepers do this as well, other clients as well, which is you need to step back and compare against, man, this is what I anticipated with the budget. Here's where we landed, and here's why. Right. The real question is why. And so on my scorecard, it's and I'm talking about the forecast. It's revenue growth, it's profit, it's composite, and it's OCF. And so if you're not familiar, I'm sure everyone's familiar with revenue growth percent, profit percent. Composite is those two added together, and then OCF is operational cash flow. That's after everything's paid. That's how many dollars are actually going into the bank account. Then I look at total leads, cost per lead, cost per sale, and then conversion rate. Right, that's marketing and sales, and then total sales, total cancels, and then total net accounts. And then the last thing is on the service side, which is where we're looking at sales on the service side, and then total cancel rate as well. And again, this is a very broad. This is for me, right? I mean, there's obviously there's a ton of operational dashboards
yeah,
that
no,
sit behind this, but this is what I want to know as an owner. Like, I need this, I need this. This is where we need to move over here. You know what I mean? Like this, it gives me a play card that on week 3, I can be like, oh my gosh, we're doing fine on leads, but look at our cost per sale, and our sales are already good. Pull the marketing back, right? Or why is our cancel rate trending that we're going to be over? 1.7 is kind of like my red line. I like 1.5. I would love to have anything lower than 1.3. But if we're trending for 1.8, I'm like, what is going on in ops, right? And so, long story short, that is to me more valuable in playing the game. And listen, these numbers, some of them are automated, a lot of them are manual now.
really. Well,
Yeah.
now, till
Well,
you get the AI age
yeah.
in there.
Well, I mean,
Yeah.
listen, the forecast is one of those things where I actually want the manager, I actually want them to put that number in.
Mhm.
And that's, I don't know, call
And
it
what if
dark.
it puts it in? What if it's on the revenue side and it's too low? Then you'll correct it. If it's
Well,
too
what we,
high, then what are you going to do?
yeah. So what we do is that's why I look at the variance. So the variance is the last column, which is, I tell people all the time, like, I don't want you to put on here what you want that number to say. I want it to be what you really think it's going to be. And then at the end of the month, we look at the variance. And what I want to build is I want to build people who are very, very good at knowing, are
We're
able to
dialed in.
yeah, they can forecast. Because my thing is that once they sign off on a number, they're going to hit it. But anyway, I have derailed us, Dan.
No, no, this is good stuff because we can tell you how, and this the theme of this episode is, how do you put these statements together? But it kind of struck me when I was at the WorkWave, their user conference, all of these classes on AI and getting you all these KPIs and pulling all this data out and it's all cool, but is it actionable? What do you
Mm-hmm.
do with it? Or is it just a cool number to have?
Mm-hmm.
And so it's important that if you're going to use these to create actions, that they're accurate, right? And
Mm-hmm.
so that's extremely important. So, you know, what I wanted to discuss today is what is it that you do during the month in order to make sure that you have accurate financials? Because financials are the hallmark of this, and then within that are all these operating statements. And so the um, the way that I look at it is it all each month culminates in a closing process that ultimately creates your reports, and also that should be closed. So each period stands on its own so that you can't adjust a prior period by accident. Occasionally you'll want to adjust it and you have to open it up, and but by accident you don't want it. You want it once it's in stone, it's in stone. And the other thing that you were mentioning is budgeting. This is kind of an elementary thing, but I definitely get people asking, we didn't make budget this month. Should we change it? Well, you can change it for the future, but you don't change it for the past month. Of course, you don't rig the game after it's over,
No,
you
listen.
know?
Listen. The other thing I'm going to mention out of this is that, and I this is pretty raw for me because we just got through, and I say we got through. I feel like we're on the backside of this now, and it took us almost 2 years to get it right, and that's terrible to say, but here's okay. So back when I ran a marketing company and I used to give marketing advice, I would tell people all the time before they would come on as a client. I would say, listen, here's the deal. Get your client fulfillment system locked in and dialed in. If I come in and I pump you up full of marketing and you can't execute, it's going to be a disaster and you're going to get bad reviews and you're going to come back to me and be like, we're not getting leads and we're not performing. And it's going to be because you launched before you were ready. I'm going to say this for your numbers. If you are like a little loose and your accounting system is not as tight, or you don't really understand, like, we used to be like generalist in accounting. I'm talking about a triangle. If it went kind of in that category, that's kind of where it went, and it wasn't very tight, and it bit us. You know, I mean, we ended up shaving off. I mean, listen, we run a gross margin consistently in the high 60s, and that's an amazing growth, and that has come through really digging into these small little 1%ers, these half percenters, and it took a long time to get there. And as you get larger, that gets really, really difficult. But that's a long way of me saying this, which is you need to be patient and you need to make sure that your numbers are really correct before you start making major decisions based on that. Because we were making decisions and we were, I thought we were pretty efficient. I thought that we were pretty good. And man, when we started digging into these little half percents, and like we were fat, meaning like we had a lot of
I
fat
would
in.
I would say that you discovered a few little points, but the reason that you're in the high 60s or even in the 60s is because you do
Triangle service.
three
Yeah,
time
triangle
a
service.
year service as opposed to 4 time a year service or monthly
Or
service.
six. Right.
Yeah, a lot of people are still doing this every other month. Oh man, it's great because we get in all this revenue. But each time you do that, you have to send a guy out there, right?
Mm-hmm.
So if I'm doing a $50 a month stop and I pay a guy $20 an hour and it takes an hour, my labor rate is 40%. If I turn it up to maybe $100 every quarter, then that $20 becomes a 20% labor rate. If I then create $150 4 times a year, then my labor rate is, what is it, 12%, 12.5%, something like that, right? So that's
Mm-hmm.
why you're doing what you're doing. By the way, I highly recommend 3 time a year service.
Yeah.
You're doing less service. So, geez, how do I keep my guys busy? That's not important. You'll figure that out, right? And what's the hardest part of this business? Getting good people, right? So if you're doing less work for more money, why wouldn't you be doing that all day long, right?
Assuming that you can keep the service level the same for the customer, which you
Right,
can,
right,
which you
right.
absolutely can. So don't let other people be like, "Oh my gosh, you can't do Triangle. It'll never work here." Well, I see people doing it in South Texas. I see people doing it in Florida. So sorry, but
Hmm.
that
Yep,
doesn't hold weight. At least not with me. Don't have to agree with
absolutely.
me, but I see it working very well. And they run the same reservice rates as folks doing quarterly. and bi-monthly. So
Yep.
anyway.
So anyway, getting back to our original topic.
Yep. Keep going.
So So one of the things that we do is our CRM, our Pest Pack, our field routes, our, Real Green and whatnot. Those have certain numbers in them, right? And then those go over into QuickBooks for these revenue numbers, right? And a lot of times I'll pick up a new client and the revenue will just say sales. And it's everything that they put in the bank, right?
Hmm.
And the government probably says that that's okay when you do your tax return, but as a management tool, it's not very effective at all, right? So what I want to know is, I've got my CRM set up so that I can track recurring and non-recurring. I might have it set up so that I can track commercial versus residential versus WD, maybe bed bugs, other services, right? And so why wouldn't you preserve all that information and bring it over into QuickBooks so that you can, um, you know, use that information in your P&L? And the way that you do that is there are various reports in these CRMs that spit out what you did for the month in terms of production, not in terms of collections, money collected, but in terms of productions. And so what you're doing is you're putting the sales entry in by the production that you do, right? So this is an
Hmm.
accrual-based revenue. And some people, what does accrual mean? Accrual is when the work is done, you put it, you recognize it, not when it's paid.
Right.
And there's an accounting concept called the matching principle. And the reason that you do accrual based is because you're matching the expenses with the revenue, right? So maybe I do a $100,000 bird job and don't get paid for 90 days, but I incurred all the labor and materials this month. Well, that's not a good match, right? Because this month
Hmm.
I'm going to take a loss for everything I laid out. And in 2 or 3 months, when I get my money, it's going to be a big windfall because I don't have any cost associated with it. So what you're going to do is you're going to record it when it's produced, and even if it becomes an account receivable. And in doing that, the other side of the entry, when you put in all of the revenue by service type, the other side of the entry is accounts receivable, right? So everything's an account receivable. And then you relieve that accounts receivable with all the payments that you got. So in a perfect world, you do $100 worth of production, you get paid $100. Well, that's not really what happens. You might do $100 worth of work, but you get paid 80 because you have 20 of receivables, or you get paid 120 because last month somebody owed you money, and so you recognize that through this accounts receivable, which is a off P&L account. It's a balance sheet account, right? So what you're trying to do is make sure your P&L has production value and by category, commercial, residential, WD, and within those categories, recurring, non-recurring. Okay.
Right.
Does
Hmm.
that make sense?
It does.
Okay. The other thing that you're going to do, and we see all the time, is that these CRMs track your sales tax for those who live in states where there's sales tax that you need to collect. And some states you don't collect sales tax on services. But what it does is it accumulates that so that you're not just saying, how much money did I, we have our state is a 7% sales tax and we put 100,000 in the bank. So therefore we gross it down and that's our sales tax payment. Well, that's not how you do it. What you do is the CRMs are real good at it. You take the sales tax that is charged and that becomes a balance sheet item that you'll pay off as a liability for the next month. Okay. And so that's how that works. Now, so assume that we do that at the end of each month. My recommendation, so there's all these people who have built bridges from field routes to QuickBooks, and I don't think PestPack even has it anymore because, for the online, because it's just not worth it, right?
Right.
You, if you want to see what your daily revenue is, go into CRM. A P&L that's incomplete doesn't give you information. And in fact, if you try to use your P&L that's incomplete, you could make some bad decisions because your data isn't all there. So in other words, geez, I'm
Yeah.
getting rich this month.
You would
Yeah, right,
never
right,
forget an expense. Just say
right,
that.
right. I haven't recorded payroll. I'm making a fortune this
I'm
month,
doing so great. Yeah.
So yeah,
Yeah.
so So that is, pretty important. So you've got this revenue. The next thing that you're going to do is your expenses, right? So you're building this P&L all month so that you can use it at the end of the month. And as Donnie said, which is true, when once it's done, it's looking in the rear view mirror. But if you
Mm.
have months and months of data, you can see if there's consistency so that your future forecast, if I've done $100 every month for the past 2 years, I'm not going to go to 1,000 next month. So you test it for reasonableness. But the purchases, can't tell you how many clients that we take on that, you say, geez, you are so profitable. How do you do that? Oh, we just run a really good operation. I noticed that there's no accounts payable on your books. Oh, yeah, that's because they're all sitting in a drawer somewhere, and I pay them when I. So it's not on your P&L, right?
Yeah.
See,
Yeah.
QuickBooks has a very good, robust accounts payable system. Doesn't mean you have to pay it right away, but enter it. And oh, by the way, there's a plug-in to QuickBooks Accounts Payable called Bill or Bill.com.
Mm.
And there's another plug-in that goes into that, which is like a receipt tracking. The reason that you would use those and not the AP system in QuickBooks is because maybe you have multiple levels of approval, and Bill.com allows that. So, in other words, a technician buys something and he approves it, then his manager approves it, and then the person who actually pays the bill, they approve it or push the button to send the check off. So that's important. Okay.
Right. Okay.
So
And the receipt tracking is that through bill.com? Like I know you talked about it. Which
we use a service called Dext.
right.
And I believe Dext might be owned by Bill.com. I'm not sure, but there might be their own. But Dext is pretty cool because if you're using credit cards a lot as opposed to paying bills,
Mm-hmm.
Dext will match the expense on your credit card statement with the receipt itself, right? And it just sits there. So if you ever wanted to look back a year from now and say, well, what I know I bought chemicals on my credit card, what were they? So that the invoice is actually attached to it so you can see, well, I bought it from this distributor and here's what I bought. So that's pretty cool. The other reason that you might want to do it is you get audited. Okay, what's the expense? Boom, you hit a button. You don't have to peer through filing cabinets and whatnot.
Right. Yep.
So
Yep.
Dext is a pretty cool piece of software that we use, and there are others out there. But that's pretty cool.
Yeah. Yeah.
Yeah. So then what we do is we recommend that you use a payroll company. There are a bunch of them out there. There's ADP, there's Paychex, there's one called Gusto that a lot of people use. We actually use that in our accounting firm. It's more of a self-serve type thing. So if you need a lot of hand holding, they're probably not the ones, although ADP and Paychex are, depending on who your rep is, they can be a disaster too.
Terrible.
But the cool thing is that they have the systems. If you don't need their help, they're really good. As soon as you need a person to get on, then it's not that good. But the cool thing about the bigger payroll companies is they have an accountants portal that you can go in, or we can go in and grab your payroll, and then we journalize it. And you want to journalize your payroll into your functional departments, meaning your technician labor, sales labor, office labor, et cetera, right? So the more you set up on the payroll side, the better or the easier that entry is going to be. But you have to put that entry into into QuickBooks so that you get your labor distribution. Okay.
Right. Yep.
Now, so you're doing that all month, right? You're paying bills, or you're entering bills into your system. You're running payroll, and then at the month end, you're going to you're going to do some reconciliations, right? So you're putting all this information into into QuickBooks from your CRM, the money that you receive and whatnot. So you have to reconcile from your CRM to QuickBooks, right? And
Mhm.
then you have to reconcile from QuickBooks to the bank statement, right? Because that's where, if you don't watch it, that's where theft can happen. So you need
Mhm.
to really understand, make sure that, okay, Pest Routes or Pestback says that I received this, and then it went into QuickBooks, and then it went into the bank. We see it on the bank statement. The bank statement from an accounting jargon would be known as third party, uh, a third party document that allows you to confirm what you say that you put in the bank, right? The bank statement would be that. So you reconcile to that. Um,
Another thing that you just mentioned, and I think we should talk about here just briefly, is, when you run a business, there's a lot of statements to review, and these
mhm,
credit cards get slippery fast. They get slippery very, very
very
fast.
fast.
Even if you're, 2 million. Um, and I will tell you, I have struggled, me personally, reviewing these credit cards, and then, like, what is that lunch for, and what is this for, and you kind of need to be in those details. And so if there's a way you can automate that, push it to the P&L or whatever. I mean,
So
ultimately.
you can download the transactions off of your credit card into
Mhm.
QuickBooks. And if you look at it every day, then you can question it. If you wait till the
Correct.
end of the month,
Right.
it becomes a real
Well,
a real
that's
chore.
exactly my point, which is, you just need to. You were talking about fraud, and listen, we here at Triangle, we had a guy that came on board, and this happened last year, and his perspective on credit card use and ours are very different. And within the first 60 days, we realized, you know, that
That you had different perspectives.
we have different perspectives, and so we gave him the opportunity to go work somewhere else, and let him grow on somewhere. But I mean, listen,
You didn't
I
give him the opportunity to call the police or
well, and it was, well, I didn't know, and it's like, well, actually, you did.
well, what was he buy? What was he putting on his
Well, it
credit
was
card?
like all kinds of stuff. I mean, it was, some of it was alcohol, some of it was like, it was just like, oh, I didn't realize I was using the card. It's like, okay, let's not let it happen again. And then we did a payroll deduction to repay it
Yeah,
because it was,
yeah.
and then sure enough, man, it was like 3 weeks later, and it was happening again. And it was like, okay, so apparently, yeah. Anyway, my point here is that if that had happened to me 5 years ago, I probably would not have known it. You know what I mean? I would
Yeah.
have looked at it and been like, oh, they just went out to eat. And
Hmm.
and so the point of me saying that is this: is not that I'm not trying to make light of that situation. It was absolutely embezzlement, fraud, call it whatever you want to call it. I don't really care. But ultimately, it was one of those things where our systems had gotten better, and I was able to see it. And you don't need to. I don't think it's very difficult these days, I think, to skim off of a pest control company unless you're doing cash all the time or something like that. We do credit
Well, to
cards, and
skim on the revenue side, but what you just determined
yeah, but
the credit cards and
that's
if you
exactly the point
use
I was going to make.
yeah,
Yeah.
if you use credit cards properly, you can get points, you can get cash back. So why wouldn't you?
Mhm.
But sometimes it's a little more difficult to
It's
control.
just, my point here is that, and I think we all, I mean, it's just a necessity of business these days. You just got to come up with a good system where you're regularly auditing them as an owner. Right? You need to be looking, or at least have someone that's, because it's hard to see in the percentages. It really
Hmm.
is.
Because
I'm
they're immaterial. It's a
right. I
small
mean,
amount.
because I manage by percentages.
Right.
So I don't know.
Yep. Yep.
Yeah.
No, you're right.
Yeah.
So then you're reconciling the bank statement, but you're also reconciling your loan statements for the vehicles or, other loans because you want the right amount on the balance sheet and you want the right amount of interest charged off to the P&L. So you've got to do that. And then, there's some accounting entries that you make, the depreciation, amortization, if you have any, or other accruals. So sometimes your payroll falls in the middle of the week. So there's two ways you can handle that. You can either record the payroll the day that it's paid and have it bridge two periods where you can, create, the amount of payroll. So let's say that the payroll date falls out on the fourth of the month. So you have 4 days of payroll. And what are you going to do with it? You're going to take the entire pay period and put it on the fourth? Well, over time, it works, but there's a different way.
Okay.
But
I
there's a
was
different way.
I was gonna
You
say
can,
I solved this a different way. Do you want to hear
uh,
it? I don't know
yeah.
if you mean it. So the way I solved this is that I became the government. So I have
That's a
two.
very profitable business, by the way,
Yes,
being the
it is.
government.
So I have two pay periods every single month, and they fall on the same days. And so that
So the
away,
15th and the 31st,
pretty much,
let me
it's
tell you what the problem with that is.
it's
If you
this
have
actually
salaried,
actually it's the 7th and the 22nd. But go
okay,
on.
if you have salaried people, right, then no problem. If you have um, hourly people or exempt people, the problem is that your overtime calculations can
Oh,
skirt multiple periods, and it's a
yeah, you
real
have to pay it
chore to figure
if
it out.
if you've got a good payroll system, it will calculate that stuff for you. But Dan is
Mhm.
correct. It's not straightforward. You have to pay attention to that. But if
Yeah.
you got a good payroll system, it will actually do that. It'll do that calculation for you.
Yeah.
But my point here is that I did it that way because that very reason. Well, there was really two. One, it was to stabilize cash flow because back in the day, when it was like I was taking money and I was eating with it that night, that we collected that day. I needed to make sure, that one, I didn't get caught, like because we do monthly billing, and then I get caught with a payroll right before that first of the month bill out hit the bank, right, and it would create a serious cash flow issue because I wouldn't have the cash to clear payroll.
Right.
Um, and so the other thing is that for my reporting, right? Because we would have months with three payrolls in it, we would have months with two
Mhm.
payrolls in it, and it was just all over the place, and I hated it. And so anyway, so I turned into the government. There you go.
There you go. So now that you're the government,
Now
so
that I'm
once we're
government.
done with all the reconciliations, then we kind of, look and make sure that, we go into QuickBooks and, create a P&L and we look at it and see is everything all right. But what we've been doing at PCO Bookkeepers, and you can do it too, or you can use us to do it. We have this new reporting package called Fathom. It's very inexpensive. It's like $50 a month per user. And it is a report writer for QuickBooks. And you can also insert other information like operational information. So that's how we create our month-end statements, where we can compare you to the rest of the industry, where we can do break-even analysis right on the report, things like that. It's part of our reporting package. If you're interested, in using us to do it, you can, but you can administer it yourself. It's not, I wouldn't say it's intuitive to set up, but if you spend a little bit of time, you can set it up, and it's a very, very cool option that gives you so much more visibility and allows you to create consolidated dashboards for your functional areas. Um, and it's pretty neat stuff. It's a whole lot more robust than what you get out of QuickBooks. And
Mm.
so that's what we do. But if you don't want that, you can just print the reports out of QuickBooks. You can do a P&L. You can do a P&L by month, which I highly recommend that you look at, just so that you say, every month I pay $1,000 for rent. How come last month there was no $1,000 rent payment? Something
I was
like
going to say
that.
that's probably the most important thing you can do is just flow it over and do month
Yep.
by month comparisons and year over year comparisons. Those two
Mhm.
you find a lot. You'll either find missing bills or you'll find I mean that's to me that's probably the most insightful thing that you can do at the end of the
Or
month is.
doubled up bills, right?
Mm-hmm.
So,
Yep. Exactly right.
so
Yep.
yeah. And so that's kind of how we make sure that the data that you're running your business by is consistent and correct. And, all of those, that whole process is what PCO Bookkeepers does with all of our clients. That's how we do it. So, and that, my
That's a
friend,
wrap. Is
that
that a
is a
wrap?
wrap.
All
That's a
right.
wrap.
Well, I
So,
think a few key takeaways from this podcast. Number one is um, I think it's really important that you got a solid system to make sure that the data that you have is super accurate. And I would take the time to just confirm some of the assumptions that you're making. So number one is to make sure your data is really, really good, because ultimately what you don't want is inaccurate statements, which, we've had them at Triangle, unintentionally, of course. But make sure that those systems are solid. The second thing is that, you want to run the business through operational dashboards, but you also want to run the financials through a budget, and making sure at the end of each month you understand where every dime is going as best as you can. And then ultimately you've got a solid process for ensuring that, ultimately as an owner, you're a systems engineer, right? And so you just need to verify that your financial system is accurate, it's timely, and your financial system is giving you the data that you need to make better financial decisions in the future. And, as simple as that sounds, I don't know. It seems like every time, at least for us, when I come back to it, I always find ways or areas that we thought we had right, and turns out it could be better. And technology is changing too. It's
technology. We're using a program. It's built for accountants, but it sits on top of QuickBooks that uses AI to find discrepancies in your P&L, like that rent that wasn't paid, or last month your chemicals were 7% and this month it's 14% or whatever, right? It's pretty cool, because we can take care of that on the fly. Maybe it's a miscoding, or maybe
it's accurate. But at least it highlights it.
Yeah.
Right. At least it highlights it for you. So, all righty. Just a reminder, all the resources and topics that we talked about are going to be available on the podcast website over at pmpindustryinsider.com. Just take a look under show notes. And we always appreciate any positive ratings and reviews that you have. If you don't, we ask that you pass that on to Dan. And for that, we're calling it a day. You all take care. See you now.
See ya.